All right, guys, we got 7 minutes on the clock. Welcome to the Deal Scout. On today's show, we're going to talk about the maybe changing of the real estate industry and when to become a seller, when to become a buyer. And on this, we're going to have a chat with Mr. Dan, who's going to share his vantage point on it. So, Dan, welcome to the show, man.
Josh, thanks for having me, man. I know I'm on the shot clock, so maybe I'll just get right into it.
Go for it, brother.
Cool. Yeah, so Dan French, I'm with ATX Acquisitions. I've been in real estate investing and operating for 20 years, and our prior company had a really stellar track record. So we bought, coming out of the great financial crisis between 2011 and 2019, we bought $2 billion in asset value. So that's 17,000 apartments. We really focused on Florida and Texas, and again, all multifamily apartments. And that team had an amazing run. But we decided in 2019 because we felt that it was so frothy, the market had really shifted. So many people were chasing the same opportunities. And that was far different from 2011 when capital markets were completely dried up. So by 2019, we decided in a complete change of strategy to become net sellers. And we sold about $1.5 billion of the portfolio. So we maintain a small amount of deals there. But what I think separates us from the pack here in a very important way is that we like to take more of a Buffett style approach to real estate investments. And so, when people were super greedy, we got fearful. And then we sat on our hands for a while, and we just decided, like, when is a good opportunity to come back in on the investment side? And now when other people are fearful, we think it's a good time to get greedy.
Yeah, interesting. And I love that the Buffett style approach, and he's done well for himself for sure. When do you know when to be a net seller, net buyer? Because there's that, yeah, when people are getting greedy or fearful, that's a good gauge. But how do you know? And have you made any errors in that judgment call?
We made a lot of errors in our past, right? I mean, especially when I first started out in back in 2004, 2005, that was the massive error. But that's good to do when you're in your 20s, get that out of your system early and really figure out how to get better as an investor and more disciplined. It doesn't always go up. And that's what everyone got wrong in the run up to the GFC, the great financial crisis. Was it's always going to get better. Housing prices are always going to increase. And that was just a blatant lie, and everyone went along with it. So the discipline comes from looking at like intrinsic value, I think is one really important aspect. In 2019, for instance, you can buy deals then that were above replacement cost. So in the industry, replacement cost is how much does it cost for you to build that, new product in that same area. And when you buy above replacement cost, that's super concerning. So that's when you should really think about, like, why am I paying so much for these cash flows? Because in real estate, that's what you're buying. You're trying to buy durable cash flows that are going to be there for the future, and then it's all about what you pay for it and how you operate it thereafter.
Yeah. So when you have cash flow, like our business right now, we've had some big wins. We became net sellers last year, which was great. But I look at my cash flow statement. I'm like, oh man, we gotta focus on cash flow again, right? Because you could sit on some cash, but every day the cash value is going down. So we're looking to buy, invest, and grow our cash flow again. What is your advice on managing the cash flow versus what you're sitting on asset wise?
That's a big long topic there, but let me just speak to opportunity and why I think it's so compelling right now. And so if you look at the Fed, right, what the Fed has done is 22x the Fed, the fund rate, and that was done over about a year, over a year, a little over a year. So that's a massive increase. So people try to liken it to the late 70s when the run up happened then, but during that time it went from like 3 to 4% to 20%. So that's like a 4x increase actually. So what we're seeing now again is a 22x, 22 times. So it went from 0.25% to like 5.25 to 5.5, massively different. So the problems that people who are owners of assets when they earn floating rate debt, massive, and their cash flow is completely wiped out because any cash flow that they had is going to pay down the debt or a rate cap that they had to purchase if they had a floater. So that's where we see opportunity. These folks that are stuck in bad deals have to get out, and that's when we want to come in.
Yeah.
Does that
So
make sense?
yeah, absolutely. So to kind of wrap around that question is sometimes you need to be a seller especially when times change and your deal no longer makes sense, right? So it no
Mhm.
longer makes sense for them. They sell. They might still be in a good position. Who knows? But for you guys, it could be a great opportunity, especially if you're sitting on some dry powder, right? So let me ask you a question. As you guys are focusing, you focus on Florida and Texas. What does the perfect deal look like for you guys?
Well, it's got to be downside protected. So we're very conservative in our underwriting. It's got to be in an area where we understand supply extremely well, because, as you know, in the Sun Belt, people put a lot of shovels in the ground during when interest rates were super low. So that's very scary. And so, we look for downside protection in areas where the fundamentals are great. Household income strong, good schools. We'll do value add, but we're particular about what kind of value add we'll do. And then we'll buy, anything from 1980s and newer. And so some of the newer deals are very compelling. I think you can buy them at a great basis right now.
Very cool. What's one value add tip that you have for us? And then maybe you could share with people if they're looking to do a deal or they have maybe an asset for you that they want you to take a look at where you could tell them where to go to find that. So example of value add, where can people find you?
The value idea we have is in Jacksonville right now. It's fully capitalized, but it's a wonderful deal. Reach out and learn more just from a learning standpoint if you want to understand it. But I would say look at your household income and what the wallet share of rent will be after your value add program. So that's where people can get ahead of themselves if they're taking up too much of that wallet share. So be careful there, I would say is my tip.
Yeah. Where can people find you?
So go to atxacquisitions.com or find me on LinkedIn, Daniel French. My cell phone number, I always give it out, is 845-629-1808. And we have 5 seconds left.
Cool. With 3 seconds to spare, I hope you guys are enjoying these shorts on the Deal Scout. If you have a deal that you'd like to talk about, head on over to thedealscout.com, fill out a quick form, maybe get you on the show next. Till then, talk to you all on the next episode.